Welcome back to the Wall Street Podcast. Today we're doing a focused deep dive into a new Goldman Sachs research report. It's titled Amazon.com, Inc., AMZN, Q2 25 Earnings First Take, and it just dropped on July 31st, 2025. Our goal here is to really break down Amazon's Q2 performance against the estimates, look at their Q3 guidance, and pinpoint what investors are likely focusing on right now. So the big question for you listening is, was this quarter genuinely strong for Amazon, or are there some, let's say, complexities hiding beneath those headline figures? Let's get into it.
Well, looking at the Q2 results, Amazon did present a pretty robust picture. They significantly outperformed expectations, actually. Total revenues, they came in at $167.7 billion. That's up 13% year over year. And importantly, that number beat both of the Goldman Sachs estimate, which was $162.5 billion, and the FactSet consensus of $162.2 billion. Their GAAP EBIT, their operating profit under standard accounting, hit $19.2 billion. That also sailed past our firm's estimate of $16.8 billion and the street's view at $16.9 billion. So a pretty broad outperformance there. It does suggest considerable operational strength. We saw key segments like online stores grow 11% to $61.5 billion. Third-party seller services also up 11%, reaching $40.3 billion. And advertising services had a really notable jump, 23% to $15.7 billion. All of these were ahead of estimates. So that reinforces a strong core business, wouldn't you say?
Absolutely. Those core e-commerce and advertising numbers look solid. What about AWS? That's always a huge focus.
Right. AWS, Amazon Web Services, grew 17%, bringing in $30.9 billion. Now, while that was ahead of Goldman Sachs and street estimates, it was maybe slightly below what some investors were hoping for, especially given some recent competitor results. And on margins, AWS operating margins were around 33%, but profitability specifically was noted as being weaker than our firm's estimate.
Okay, so strong top-line beats, core segments looking good, AWS revenue solid, but maybe profitability not quite meeting some higher bars. Shifting then to the outlook, what did Amazon project for Q3?
Their guidance for Q3 2025 also seems to project, continued optimism. Total revenue guidance is set in a range, $174.0 billion to $179.5 billion. That range is broadly ahead of our firm's estimate, $173.4 billion, and the street consensus, which was $173.3 billion.
And operating income?
For GAAP operating income, they guided $15.5 billion up to $20.5 billion. The high end of that range is notably ahead of Goldman's estimates. It reflects about a 10.2% GAAP operating margin right at the midpoint.
So bringing it back to Q2 performance then, those beats on revenue and operating income, what does that signal overall about Amazon's current state?
I think the report sees it as underscoring a solid fundamental picture, especially for the e-commerce side of the business. The fact that total revenues, GAAP EBIT, and those key segments like online stores and third-party sellers all outperformed, well, it suggests a pretty robust operational engine. That's quite interesting, especially given, some earlier concerns maybe about retail margins. So even with AWS profitability coming in a bit lighter than GS expected, the overall strength does seem to point towards effective execution on their efficiency initiatives.
Right. Now, looking beyond the numbers themselves, what are the specific strategic things investors will be watching for from management commentary for the rest of 25? What should you, the listener, be paying attention to? Well, the report suggests focus will be on the state of the global Amazon consumer. That's key. And also how any potential tariff outcomes might reshape their global first and third party operations. That's a big unknown. Investors will also want clarity on major investments and efficiency drives across commerce. Think grocery delivery, robotics advancements, plus insights into those non-revenue generating investments like Project Kuiper, their satellite internet project. How will that impact profitability in the near term? That's definitely something to watch.
And on the AWS front, given the, let's say, intense competition in cloud services, any specific details there are going to be critical for monitoring future growth. It's interesting because despite that strong revenue growth we mentioned, the slight dip relative to profitability estimates suggests margin pressures are a real focus. So what management says specifically about AWS revenue growth drivers, particularly thinking about the second half of 2025, that's going to be very closely watched. And of course, their comments on the broader AI landscape and forward CapEx trends. Well, those are crucial because of the direct link to future AWS expansion and ultimately overall company profitability.
Okay, so pulling this all together, what's the bottom line from Goldman Sachs on the stock itself?
Goldman Sachs is maintaining its buy rating on Amazon, and the 12-month price target remains $220.
A buy rating. But as always, there are risks to consider.
Exactly. While the earnings do paint a solid operational picture, for you, our listener, doing your own analysis, it's crucial to weigh the risks. Can Amazon really keep up its e-commerce growth momentum with all the competition? Can it navigate those AWS margin pressures effectively? And what about the challenges of scaling up other high-margin businesses or just the general volatility we see from the global macro environment? I think the real deep dive for your continued thinking is how Amazon balances these big long-term strategic bets and those external pressures against the operational strength they've clearly demonstrated this quarter.